Are you ready to examine the Asian operations of the financial world's giant? This is no ordinary asset manager. It's the invisible hand shaping the global economy, the Asia-Pacific, the new epicenter of economic and strategic power after 2 centuries of Western dominance. A growth engine, an ocean of opportunity, yet also a land of ancient cultures, complex politics, and unpredictable risks. How did BlackRock first step onto this terrain? How did it spot opportunities even in turbulent times? And how is it fundamentally transforming the financial destiny of this vast continent? The year was 1995. In America, a company that hadn't yet completed its financial revolution, but was sowing the seeds of the future, existed: BlackRock. And that year, still under its parent company PNC, they took their first quiet steps in a distant land, in the heart of the East, Tokyo. Who could have known this humble beginning would become the seed that 30 years later would radically transform the region's financial landscape? Japan would not just be a country, it would be the first fortress in Asia. In 1999, BlackRock took control of its destiny, declaring full independence from Blackstone. This newfound freedom merged with an ambitious vision: global expansion. Once again, Tokyo became the first stop. BlackRock Japan Co-Order Limited was officially established, securing its license from Japan's Financial Services Agency. This wasn't just paperwork. It was a declaration that BlackRock would integrate into Japan's financial fabric. Despite the market's complexity and bureaucratic hurdles, their resolve was unshakable. Then came the year 2000. BlackRock unleashed its ultimate weapon: Aladdin, the revolutionary risk management platform that spread through the financial world like magic. Named after a fairy tale hero, this system would become the invisible brain behind BlackRock's global operations, the beating heart of all its strategies. And in Japan, Aladdin faced its first major test. A staggering $1.5 trillion in Japanese pension assets were integrated into the platform. This wasn't just a milestone for Japan, it was a game-changing move for the entire Asia-Pacific. Pension funds formed the financial backbone of nations, and BlackRock was now weaving that backbone into its own system. Strategic mergers were the engine that propelled BlackRock into becoming a global titan. The 2006 merger with Merrill Lynch Investment Managers didn't just expand BlackRock's network across America, it triggered explosive growth throughout Asia. MLIM's deep-rooted Asian presence and premium client portfolio represented a golden opportunity served to BlackRock on a silver platter. Overnight, its Tokyo headquarters mushroomed to house 4,500 employees and command a colossal $1 trillion in assets. Like a master weaver, BlackRock began spinning an intricate financial web that would soon stretch into every corner of Asia, its threads penetrating the very lifeblood of the region's markets. These mergers represented not just an increase in volume, but a profound market integration. By 2015, BlackRock's domestic equity portfolio in Japan had reached a staggering $68 billion. And that wasn't all. In the field of pension outsourcing, it became one of Japan's top 3 external asset managers, with an influx of 2.5 trillion yen, or approximately $16.7 billion in new funds. BlackRock had embedded itself into the financial veins of Japan, becoming an indispensable partner. Its operations in Asia accounted for 7% of total assets under global management, making a vital contribution to BlackRock's overall growth. 2020. As the world held its breath in the grip of the COVID-19 pandemic, the global economy teetered on the edge of a cliff. Crisis, fear, uncertainty. But for BlackRock, this wasn't a catastrophe, it was a lever. The Bank of Japan made a massive move to keep the economy afloat, a $15 billion corporate bond purchasing program. And who was entrusted with managing this critical program? None other than BlackRock's Tokyo office. Even in times of crisis, BlackRock was adding to its power. Japan's financial future was placed in the hands of BlackRock's algorithms and expertise. Finance wasn't just about following the money, it was shaping the future of the planet. By 2024, sustainability and ESG principles had risen to the top of the global investment agenda. BlackRock emerged as a leader of this green wave as well. In Japan, the iShares MSCI Japan ESG Select Covered Call ETF attracted $112 million in net inflows in just 6 months. This ETF not only invested in sustainable companies, but also generated premium income. The numbers spoke for themselves. While the MSCI Japan Index gained 7.7%, the S&P 500 had risen only 0.56%. BlackRock was becoming the driving force behind Japan's economic and environmental transformation. Investors had begun to realize that it wasn't just about returns, the future of the planet mattered too, and BlackRock was positioning itself as a pioneer of this new era. After Japan, BlackRock set its sights on China, the world's fastest-growing economy. But the Chinese market was a completely different playing field. Political risks, complex and often opaque regulations, and heavy state control. How would BlackRock navigate this arena? The answer was patience and determination. On June 11, 2021, BlackRock became the first global asset manager to receive approval from the China Securities Regulatory Commission to launch a wholly foreign-owned mutual fund business. This wasn't just a license. It was a clear signal that China was flinging its doors wide open to BlackRock and taking a significant step toward deeper integration with the global financial system. And just a few months later, on September 8, 2021, the tangible result of this historic move in China emerged. The New Horizon Mixed Securities Fund was launched with 6.7 billion yuan, roughly $1 billion, in assets. It received far more interest than expected. Over 111,000 individual Chinese investors flocked to the fund. This was a clear validation of BlackRock's strategy in China. Chinese investors were placing their trust in the expertise and return potential of a global giant. However, this rapid rise also sparked serious criticism. In 2021, billionaire George Soros described BlackRock's investment in China as a tragic mistake. According to Soros, these investments would strengthen Beijing's authoritarian regime and turn a blind eye to human rights violations. This wasn't just a financial decision. It carried profound moral and geopolitical implications. BlackRock firmly rejected these criticisms. The company argued that its presence in China was aligned with the interests of its clients, and that, as a global asset manager, it had a responsibility to meet a wide range of investment objectives. BlackRock wasn't just operating in financial markets. It was also maneuvering on a complex geopolitical chessboard. As tensions between the US and China escalated, BlackRock's position became more delicate than ever. At the heart of BlackRock's strategy in Asia lay the technologies of the future. Semiconductors, artificial intelligence, electric vehicles. These weren't just technological trends, they were megaforces, shaping BlackRock's multi-trillion-dollar investments. By investing in the infrastructure behind these megaforces, the company was laying the foundation for the economy of tomorrow. By 2025, BlackRock took a massive leap forward with the AI Infrastructure Partnership. Teaming up with tech and energy giants like Microsoft, NVIDIA, xAI, GE, Vernova, and NextEra Energy, they began building next-generation AI data centers and power infrastructure, starting with $30 billion in funding, with the potential to reach up to $100 billion in total. This colossal partnership aims to finance energy-intensive semiconductor facilities and high-performance computing infrastructure across the Asia-Pacific region, including Japan and China. BlackRock wasn't just investing in technology, it was laying the groundwork for the digital world of the future, constructing the very infrastructure of a new civilization. BlackRock was not only investing but also monitoring its investments through the lens of sustainability. Using the Aladdin sustainability platform, they tracked the environmental impacts of semiconductor factories, such as carbon emissions and deforestation, via satellite imagery. Clarity AI data was integrated into BlackRock's Aladdin system, allowing real-time ESG risk scoring of Japanese and Chinese semiconductor companies. BlackRock was managing not just money, but also the environmental standards of the future. This was both a responsibility to the planet and a reassurance to investors. Another rising megaforce in Asia was the electric vehicle revolution, and BlackRock was playing a leading role in it. In Japan, through passive funds like the iShares MSCI Japan ETF and iShares Core MSCI Japan IMI, BlackRock held positions worth nearly $68 billion in giants such as Toyota, Nissan, Honda, and Panasonic. Starting in 2024, the weighting of these stocks was increased in systematic portfolios themed around semiconductors and the EV supply chain. BlackRock was financing the transformation of Japan's automotive industry. In China, the situation was even more striking. With an 11.2% Chinese weighting in BlackRock's iShares lithium and battery producers UCITS ETF, battery giants like contemporary Amperex Technology were leading the charge. Chinese EV companies such as BYD and Great Wall Motor held significant positions in BlackRock's portfolios. In fact, a consortium led by BlackRock made a $1.2 billion pre-IPO investment in Chinese EV battery manufacturer SK On. BlackRock was one of the biggest biggest financiers of Asia's electric future revolution. This was not just an investment, it was a strategic move. For Japan, grappling with an aging population and a shrinking workforce, factory automation and robotics were of vital importance. BlackRock emerged as a key player in this area as well. Through the iShares Automation and Robotics ETF, it invested directly in Japanese robotics giants like Fanuc and Yaskawa. This ETF carried a geographic weighting of 28.46% in Japan. BlackRock was not only investing, but also promoting the industry. At the BlackRock Japan Showcase in Tokyo, cutting-edge robots from OEMs like Fanuc and Yaskawa were demonstrated live in assembly, welding, and logistics scenarios. Executives from automotive giants such as Honda and Toyota experienced multi-robot coordination firsthand at this demonstration facility. BlackRock wasn't just investing in the future, it was building it. Digital transformation was another key pillar of BlackRock's Asia strategy. Especially in the healthcare sector, digital monitoring and control applications stood out in the company's active portfolios. Massive digitalization investments by major Japanese corporations were creating significant opportunities for BlackRock. The company was adapting to Asia's rapidly digitizing societies and taking on the financing of this change. BlackRock did not limit its Asia-Pacific presence to just Japan and China. South Korea, the tech giant, was also ambitious in this country. At the end of 2024, Yoon Pyo Lee took the helm of BlackRock Korea. The company was shifting away from public funds to focus on alternative and active strategies. This meant targeting more niche but higher yield areas in the Korean market. Investments in clean energy infrastructure, especially electric vehicle charging networks and solar energy projects with Bright Energy Partners, were expanding BlackRock's footprint in Korea. In fact, in February 2025, the Korea National Pension Fund transitioned to BlackRock's Aladdin platform. This was yet another testament to how deeply BlackRock had penetrated Korea's financial infrastructure. Taiwan. Amid geopolitical tensions, BlackRock was quietly making major moves here as well. The focus: clean energy. Since 2018, they had been investing in solar energy projects. And in July 2024, a partnership between BlackRock-owned New Green Power and Google aimed to develop a new 1-gigawatt solar power line in Taiwan. Google's massive data centers would be powered by this clean energy. BlackRock was contributing to Taiwan's energy independence and environmental sustainability. Singapore, the financial gateway of Asia, a meeting point for global trade and capital. BlackRock was ambitious here as well. It attracted attention with innovative products like the systematic Asia-Pacific Equity Absolute Return Fund. Fintech and sustainable energy funds were especially strengthened with a China theme. And with the $5 billion Mass-Fast-P partnership, they were financing low-carbon sectors. BlackRock was positioning Singapore not just as a financial hub, but also as the strategic center for its regional operations. However, this rapid growth and deep penetration also brought serious challenges. In Japan, chronic issues such as policy uncertainty, low weighting, and yen-driven volatility were on BlackRock's agenda. The Japanese economy was still grappling with deflationary pressures, and its demographic structure demanded a new economic model. Despite these challenges, BlackRock was striving to maintain its position in the Japanese market. The situation in China was even more complex. Political risks were constantly looming. Operational issues such as employee safety, device bans, and travel risks affected BlackRock's day-to-day operations in China. Moreover, due to investments in companies blacklisted by the US, BlackRock could become the target of political investigations. Cybersecurity concerns added another layer of complexity. China's national security laws required companies to maintain a delicate balance in data sharing. BlackRock had to carefully calculate every move on this giant chessboard. As of 2025, BlackRock's presence in the Asia-Pacific region had reached astonishing proportions. They had offices or representations in more than 30 countries in the region and served clients in over 100 countries. 7% of assets under management came directly from Asia-Pacific. This was clear evidence of how deeply BlackRock's global footprint had expanded. Alternative investments surged by 45% in 1 year, reaching $474 billion. Digital assets, including Bitcoin ETFs, accounted for 1% of managed assets and base fees. In China, its first investment fund attracted over 111,000 investors. The Jio-BlackRock partnership in India gathered $2.1 billion from more than 90 institutional and 67,000 individual investors. BlackRock wasn't just managing assets, it was reshaping financial ecosystems. Larry Fink, BlackRock's founder and CEO, said in an interview, Global markets are interconnected. A change in one region inevitably affects another. These words summarized BlackRock's Asia-Pacific strategy. The company was not just chasing financial returns, but also the power to shape the future of the global economy and society. Asia was the most dynamic and critical piece of this global puzzle. So, where will BlackRock's unstoppable rise in the Asia-Pacific lead? How will this financial giant integrate the dynamic energy of the East into its global power? And how will this integration change the future of Asia and even the entire world? The answers remain one of the greatest mysteries in the financial world, for now. We've reached the end of the BlackRock documentary series. This is the story not just of a financial company, but of one of the greatest powers of the modern world. Subscribe, leave a comment, and don't forget to turn on notifications to stay updated on new episodes.